Hello, everyone. It is my pleasure to welcome you to this live webinar where we will be discussing investing in your home and what that may mean from a financial and risk standpoint. I'm Katie Brown. I'm co-founder and principal of Morton Brown Family Wealth, where it is our vision to build a community of clients and professionals leading purposeful lives through the stewardship of wealth. And that's what today is about. It's bringing together a community of professionals with our firm and HMK Insurance to help provide insights and guidance to support the purposeful decisions that you are making with your wealth. As I mentioned, I'm Katie Brown. I am a certified financial planner and a chartered financial consultant. And I've had the privilege of working with families for nearly 20 years navigate their financial world. Morton Brown is an independent registered investment advisory firm. I'm joined today by Kelly Eschbach and Gail Kitson from HMK Insurance. I'm going to let them introduce themselves and also share a little bit about HMK. So Kelly and Gail.
Good morning, everyone. Thank you for joining us today. We'd like to say thank you to Katie for actually inviting us to join you this morning. My name is Kelly Eschbach, and I am the personal lines manager with HMK Insurance. We are located right off of 512 on South Commerce Way. And just to give you a little information on the agency, we were actually established in 1914. We are a full service agency, so we do commercial personal lines as well as employee benefits. HMK has approximately 65 employees, and one of the things I'll say from my perspective that's very beneficial is we do have the different lines of coverage. So for Gail, who I'm going to introduce in just a few minutes, as well as myself, it allows us to see both parts when we are going to talk about some coverages. So at this point, I would like to introduce you to Gail. She is our high net worth insurance advisor at HMK.
Thanks, Kelly. Good morning, everyone. My name is Gail Kitson. I work primarily with HMK's high net worth individuals and business owners. We partner with several carriers that specialize in the protection of personal assets for the affluent community. I'll turn it back to Katie.
Thank you, Kelly and Gail. And I'm excited to kick this off. I thought a good place to start would be with a quick poll to check in and see where everyone is at with this renovation topic in mind. So I would love to know if you have already completed a project, if you are contemplating one, or perhaps you don't know where to start. So if you can all give a quick response, that would be great. And while that's queuing up, let's see. And while that's queuing up, let me go over just a couple of quick housekeeping items. We would love for this presentation to be interactive. So if you look in the bottom right-hand corner of your screen, you can see we have a little chat box. If you have any questions or comments or anything else during the presentation, please feel free to post them there, and we will do our best to address them kind of throughout. So we look forward to hopefully answering your questions. It's so interesting. I mean, just looking around my neighborhood and other neighborhoods, there is a lot of activity going on. So we are excited to kind of talk this through a bit today from a financial perspective, and then also a risk management perspective as well. And it looks like, okay, the results are in, and it looks as if the majority are contemplating a home renovation. Some of them have recently completed one, so that'll be kind of interesting to talk through, some things that you may have done or some things that you might want to circle back and revisit. So we have a good mix of different stages going on right now, which I think is fantastic. So from here, what I would like to touch on is kind of that big picture conversation. And as you're thinking about making a significant investment, or you've thought through the process of making a significant investment, I'd like to pose kind of three questions. One, have you looked at your personal balance sheet? And do you know how this investment impacts your current cash flow? And also, what is the long-term impact on your financial plan, thinking through a significant investment in your home or renovation? And so starting with the balance sheet, and just a quick refresher, a balance sheet is ideally something you have on a single piece of paper, or it could be electronic, but a visual in front of you where you can list everything you own, which are your assets, and everything you owe, which are your liabilities, the difference between the two being your net worth. And it's a good idea to stay on top of that. It's not something you necessarily have to look at even on a monthly basis or anything, too often, but maybe twice a year, making sure that you have a good handle on all those pieces, because we all know that life moves on, and sometimes we look up and realize there are little pieces, little bank accounts here and there, or stock investment accounts or retirement accounts that perhaps we might not have thought about for a while and have lost sight of. So it's important to bring all of that together, especially as you're contemplating a new investment. And also recognize that when you're doing a home renovation, you're not necessarily just spending that money. You might be shifting from one asset type to another asset type. So you might be taking money from your cash and investments and increasing the value of your home. They're both assets, but now you've tilted the balance sheet a little bit. And so it's important to always be cognizant of how much liquidity you have. So liquidity being how quickly you can turn something to cash. So if you're pulling from those really liquid places and putting it someplace that's not quite as liquid, there's not always somebody standing outside our front door with a check ready to give to us for our home. Sometimes it takes a little more work to get the money out of the home. You want to be aware of that ratio and make sure that you maintain sufficient liquidity all through the process, and that you have those emergency reserves on hand. And we'll talk about that a little bit in cash flow next as well. But just to get a good handle on what your balance sheet looks like. And sometimes when you shift, it may not be dollar for dollar. So for instance, if you're putting in, if you're reinvesting in something, you might have some personal preferences, things that you really want to be in that new project, but the future buyer may not necessarily pay for that. So you might be paying additional money to get something to your liking that you will really enjoy, that you might not receive the dollars for on the other side. And that difference there, that's your quality of life premium. And that's okay. That's fantastic. I mean, that's what our money is for, to help, enhance our quality of life. But it's just building the understanding of how that fits into the bigger picture. So start with a balance sheet. And then think through, cash flow. How does this impact your current cash flow? So you may have financed a project, or you're thinking about financing a project. That's great. And that may make all the sense in the world. That could be a good route to take, especially while interest rates are still low. But now you've created another monthly expense that needs to be covered somehow. And so that monthly expense may come, you may spend down a different account to help pay for that monthly expense. Or maybe you reduce your savings for other future goals. And so to understand, and we're going to talk about that next as we look at the longer term impact, but recognizing that you might have to pull back some savings, or maybe you shift priorities a little bit. If you built that dream pool in your backyard, the pool at the country club might not be as enticing as it was before. So maybe you decide, I'm not going to spend money there because I'd rather spend money here. So it might be a matter of shifting your priorities to make room for that added expense in your current cash flow, your monthly expenses. And then the other thing that I wanted to touch on is I mentioned a minute ago, emergency reserves. If you're increasing your monthly expenses, make sure that you're also increasing your emergency reserves. So that's the cash that you keep on hand, quite literally, for emergencies. As you're doing projects, things pop up that you're not expecting related to the project, but in life in general, things pop up that you don't expect. So you always want to make sure that you have sufficient emergency reserves. And as you're shifting some things on your balance sheet, sometimes you need to increase those cash levels to make sure that you have room for the unexpected. Now, the long-term impact of a financial investment, renovation, home project, whatever the case may be. Again, it's important to understand that big picture and be willing to make changes, perhaps along the way, to get clarity on your plan B. So if you're going to invest and shift something where you might not have access to that cash, what is your plan B for getting access to money if you need it? And then also make sure that this investment is sustainable over the sustainability of your decisions over time. And I thought the best way to illustrate this is I actually want to pull up an example here, and I'm going to share my screen to pull up a potential client example. So I am going to share with you, it'll take me just a second to get there, but I am going to share with you a story about Frank and Joanna Miller. So Frank and Joanna Miller, they have a current net worth of a little over $2 million. They have about $1.3 million in investments in cash accounts. That's both retirement, non-retirement. They have their primary residence, their primary home that's worth about $850,000 with a $400,000 mortgage. Plus they have another smaller mountain vacation home of about $250,000. And they are considering investing into a new pool in their backyard and some additional landscaping, and they're estimating that cost to be about $150,000. And they want to know, is this something that could fit into their plan? And if so, what adjustments do they need to make? So this is an exercise that we do often with our clients to help support good decision making. So we are actually going to go into the decision center to help walk through some examples or this scenario with Frank and Joanna. So here in the decision center, we can see an estimate of Frank and Joanna's portfolio values over their lifetime. So they're about 10 years from retirement, and we can see this ramp up over the next 10 years of their portfolio assets as they continue to work and save for retirement. And then they get to retirement and they're spending down their portfolio, and we see that occurring over time. But they should be in a pretty healthy financial position to support their expenses as of now. So what happens when they throw a $150,000 project into the mix? I want to take a look and see how that impacts things. So that's where this home renovation comes in. And we can see there's a pretty significant impact because that $150,000 is now, that's money that's not earning money for them later. And so the compounding impact of not having that, not having the growth attributed to those funds over time leading up to retirement. And then when they get to retirement, now the draw on their other assets is even greater. So their spend down is accelerated. And so they may not be comfortable looking at it from this perspective. So then we start talking through, all right, but how can we help support this? If this is something you really want to do, we want to support you. So let's talk about some other ways that we can support this. The first thing may be to finance a portion of it. Once again, as with rates as low as they are, that may be a great avenue for them to pursue. And so let's assume we're financing $100,000 of that at a 3.5% rate over 15 years. And that did help to fill the gap a little bit further. So we're moving in the right direction. Other things that we want to look at, just to make sure they're making good, solid decisions in general when it comes to their financial future. So one of the things, they may have assumed that they were going to take Social Security as soon as they were eligible for it. It may make sense to delay Social Security. So we want to take a look and see how much that impacts. And you can see pretty significantly. So now they're back to pretty much whole of where they were at before, just by making sure that they're making good decisions in other areas of their life as well. There is a little bit of a dip here as they fund their expenses prior to age 70, but then that higher Social Security amount really adds up over time to kind of get them back on track. A couple of things that they might consider, perhaps retiring a couple of years later and what that might look like. And now we get into the plan B scenarios. So what are plan B options? And they may decide to retire a little bit later, or they might say, I don't know if I want to retire later. I'm not sure that I'll even have that opportunity. Perhaps that decision is not theirs. And so they might consider maybe selling the vacation home. They're in 10 years, their kids are grown and they have their own worlds going on, and they just might not be getting to that vacation home as often. It might not be providing that quality of life as much, 10 years down the road. So that could become another lever, another plan B option. So now they can go into the home renovation project knowing that, okay, we can do this, but here are some adjustments that we may want to make. And here's our plan B. And some of those decisions don't need to be made today, but they know that they have options down the road. And so let me get back to the presentation here. Okay. And I'm going to just stop sharing my screen. Sorry, my navigation skills are a little light in here, so just bear with me for a minute. Am I back on the presentation? Can you guys see that? Hopefully. Okay. So now just back to just to recap a couple of the pros and cons from a financial standpoint of diving into a renovation or significant investment in your home type of project. You might have the pros. Once again, you can enhance the value of the asset, enhance the value of your home. It might provide entertainment convenience. Maybe you don't have to go seek that out someplace else. Now you have, a great place that you can provide that entertainment for you, your loved ones, your family and friends, and perhaps even provide or create a family legacy. Maybe it's something that you plan to pass down. Maybe you make some investment into a vacation home or some other, or just your home might be something you might want to pass down to the next generation. On the con side, you may need to think through your spending and your savings plan. It might make some changes there, and that's an important exercise to go through. It might force some retirement plan adjustments, and it could introduce some additional liability risk. And so that's where I want to hand this back over to Kelly and Gail to talk through some of the liability concerns.
Thanks, Katie. We do, in our world for insurance, we look really at two different things, and that is protecting your property itself as well as liability concerns. On this first slide, you're going to see the liability issues and some things to think about when you are having renovations done at the home. Renovations could be an addition onto the home, putting in a swimming pool, any type of added structure is something that you want to trigger looking into liability. The first part I'll talk about is when you hire contractors to do this work. Often you, as the customer, are working with potentially one individual as you go through that process of coming up with plans and the actual work being done. You might not think about this, but one of the things you do want to ask is not only the contractor that you're working with, do they have insurance? Do they have a commercial general liability policy? You can ask to be listed as an additional insured on that policy while that work is being completed at your home. An area I will caution you on, as we do see some issues with this from time to time. Sometimes when we hire a contractor to do those renovations, they might be working with subcontractors. You might not even be aware of that, but it is a question you do want to ask for the simple reason that if you have a subcontractor on your property, you would want to make sure that they have adequate coverage as well. You could potentially find if they don't have a commercial policy, and let's say, for instance, they're working on roofing and they fall off that roof and hurt themselves at your property, if they don't have coverage, you could personally be brought into that. So again, that's really something important for you to check on. And we know a lot of times you just take for granted that everything's in place. paying a lot of money a lot of times for additions or the other structures. So ask those simple questions because it can save you a lot of headache. Again, some of the items that should trigger you to kind of think about this, if you're adding a swimming pool, we hear of a she shed. Those are things you want to, I'll always say to you, because insurance policies can be so different between carriers. Talk to your agent when you're looking at doing something like this. Talk to your agent. A simple trampoline, which we as parents think, it's for children to have fun on. I can tell you, unfortunately, what happens is it's typically not our child that gets hurt on that trampoline. It's a friend that they've invited over. And again, you could find yourself having some liability issues with that. So check your liability coverage on your current homeowner's policy. A typical homeowner's policy is going to come with $100,000 in liability. You can often increase that to $500,000 for very minimal premium. And when I say minimal, it might be $25, $50 a year. Well worth it to protect your assets. So if you've got that $500,000, and again, when we look at protecting the assets, you want to take what Katie has talked about in that value. You want to be covered for more than that amount. So with only being able to get $500,000 under most of the homeowners policies, additional coverage is available. You would look to a personal liability umbrella that would give you additional coverage over that. So those are some of the liability concerns that you want to keep in mind, again, when you're adding onto your existing home. The next we'll talk about is actually property. It's those items that you do have there. So, one of the things we know happens, you get that renewal, homeowner's renewal in the mail, and sometimes you look at that dwelling amount and you say, this is ridiculous. This should, I could never sell my home for this amount. I'll clarify that what we insure is based on the replacement cost and what it truly would cost us to rebuild your home equivalent to what you have right now. That can be very different than the market value of the home and what a realtor would tell you the home is worth. So that's an important thing when we look at our policies. But again, if you're putting on an addition on the home and you're going to be spending $100,000 to add this, this structure, you definitely want to call your insurance agent and discuss that with them, preferably before that project ever starts. The other thing, again, we talked about the liability from having a pool or that type of structure on the property. And what you're going to find is, based on what that renovation is, coverage might either be under the dwelling if it is an addition, as we spoke about, or if you are adding an in-ground pool, for instance. They can get pretty tricky to insure because most companies, if you have a patio that is connected to your home and takes you around that pool, in essence, they consider that connected to the home, and therefore they would want to increase dwelling coverage under your homeowner's policy. If, let's say, there was a patch of grass between a patio to where you got to the concrete surrounding your in-ground pool, it becomes coverage under other structures. And that is a separate coverage under your homeowner's policy. So, those are some things to think about. Some might increase dwelling limits, some might increase other structures. You also want to consider landscaping. This can be a little bit difficult because there's limited coverage under your homeowner's policy for landscaping. And the one thing you have to remember is the homeowner's policy in most cases is designed to cover certain perils or certain types of losses. So I'll talk to you about retaining walls. These can cause some heartache because a lot of times a retaining wall is not covered under a homeowner's policy. And usually what you see is earth movement where it has adjusted that stone or brick. And as a result, that retaining wall tumbles. That's not something covered under, a homeowner's policy. On the other hand, let's say there's a retaining wall out front of your property. You run into a situation where somebody, while driving crashes into that, then their insurance should cover it. But I think you want to be mindful of landscaping work. I know a lot of times we invest a lot of money, which we, of course, are somewhat having this as a result of COVID and people doing a lot of work. And it's an area, again, you would want to discuss with your agent, find out what your actual coverage is, and then go from there. So with COVID being a hot topic, we wanted to talk to you a little bit about working from home. And I apologize, I'm not sure if you can see the slide. It appears to be actually spinning on my side. So again, I apologize about that. But, with what's going on right now, we at HMK are still working remotely from home, and our office will be opening part-time next week. So we're a little bit excited about that. But like most people were, the agency shut down pretty quickly. And before you knew it, we were doing business from home. And a few things I'll let you know. We have some of you joining us today who might be employees. We have some of you joining who might be business owners. And the coverage as far as your homeowner's policy and working from home, what you want to keep in mind is, I'm going to use my personal situation. When our agency closed, I came home with a laptop that is owned by HMK. And with that, I am also using some of my personal equipment at home, such as the printer and scanner. So in a case like this, my laptop should be covered by my employer, and you're going to have very limited coverage for those types of items under your homeowner's policy. Where you might find some coverage is under liability if perhaps you spill a cup of coffee on your laptop. But again, that coverage for that laptop is not going to be covered typically under your homeowner's policy. The items that I'm using within my home, such as my printer and my scanner, those are covered as long as their normal use is personal use. If something were to happen, there would be coverage for that under the policy. One of the other things that you want to keep in mind, again, whether you're an employee or an employer, there's three things that should trigger you to say, hey, I need to either, if this is happening at my home, I need to make a call to my insurance agent. If you have customers or you have employees showing up at your residence, that is going to cause an issue on your homeowner's policy. If somebody hurts themselves there, while you do have personal liability under your homeowner's policy, there's a chance that they could deny that claim because it is for business purposes that party was there. If you are storing product in your home, that is another thing your homeowner's policy is not going to cover. So again, you want to reach out to your agent. If you have already an existing commercial policy, it could sometimes be as easy as them adding this location to give you coverage while the product or those clients or employees are at your residence. So again, please check with your agent on that. And this is interesting because as we kind of designed today's video, we one of the things we ran into is if you are working from another structure on your property, you are not covered at all for business use. So that is something to keep in mind. And ironically, I watched on the news last evening and they were talking about how people are buying, again, little sheds to put on their property so that they're able to work from home and outside of the actual house, but still on their, at their location. They are also being used for basically student tutoring while the kids are going to school virtually. So, we're ever changing with what's going on in this world right now. But these are a few things, as I mentioned, just to keep focused on and think about, when you're working on these types of projects at the home. One other item that is definitely an important thing when we're looking at protecting assets and investments is, sorry about that, valuable articles. And I am actually going to ask Gail to join us again, and she's going to go over some of the information on valuable articles and how you can insure those.
Thanks, Kelly. Something to keep in mind if we go back to Kelly's discussion about doing a home renovation or adding an addition to your home is if you purchase any valuable articles. If you're building a wine cellar and you decide to add a wine collection, or you put in a great room and you decide to add some beautiful fine art, these items have very limited coverage under most homeowner policies. One thing to keep in mind is you want to decide if something happened to them, if you could or would replace them. A valuable articles policy, which can cover jewelry, fine arts, wine, antiques, collector cars. These are separate policies that allow you to insure those items for a specific amount. You can opt to possibly have a zero deductible as opposed to having the $5,000 deductible on your home. And if there is a loss, most times those claims will not be held against you. Again, one thing to consider is if you would or could replace them. For example, if you have a custom piece of jewelry and the person that designed that piece of jewelry is no longer here, would you want to be financially compensated for that piece of jewelry to buy something else, or you don't worry about it because you wouldn't be able to replace it? Again, as Kelly said, always speak to your insurance agent about these items. Different carriers cover these items differently, so it's best to just check with your agent. At this point, I'll turn it back to Katie.
Thank you. Yeah, so those were some of the main things that we wanted to go over. I'm going to actually pop all of us on here and just see if anybody has any questions for us. I know that we just talked about a lot of different things, and as you alluded to in the beginning, or the poll reported, people are at different stages. So the questions and the thought process, could be all across the board. So we're happy to answer anything that you might have that's top of mind. I know one of the questions that we often hear from people is, or that we've heard before, what are the mistakes that we want to make sure to avoid? And so I would love to kind of get everybody's perspective on that. I know one of the mistakes that I've seen before is not having maybe a great understanding of the different pools of money to pull from. And so when thinking about a project, maybe taking money from a retirement account versus a non-retirement account, and now you've introduced tax implications of doing that maybe you didn't have a full understanding of going into it. So I think having a good understanding of how your different cash and investment accounts might be impacted if you pull money out of it, for instance, that makes all the difference. And as I mentioned before, liquidity, and I really can't stress that enough. So if you're diving into a project and maybe your margins are too thin and you look up at some point, you're like, I don't know where the cash is coming from, that can be so incredibly stressful. So really, really watching that closely to make sure that you do continue to maintain those emergency reserves. And I do see a couple of different questions down here. I'll let Gail and Kelly kind of respond to that, the mistakes, and then we can address some of the other questions as well.
I mean, I think one of the things that I see probably more often than you would realize is somebody actually might purchase. We see the renovations being done, and we're not aware of it. The policy hasn't been adjusted. But we will also find from time to time people will purchase a second property, a secondary home, and they pay cash for the property and they don't necessarily think about insurance. And, unfortunately, sometimes it's when a loss has occurred that we're notified that there's been, another property purchased. Gail, your thoughts?
I think one of my challenges is people that do have those valuable articles and they just assume that they're covered under the homeowners policy. And while that may be true, again, there's limited coverage, plus with a loss, it's subject to the deductible. So if you have collections, if you have jewelry or cars or whatever, wine, those wine collections, please insure your wine collections. But those are the types of things that I come across that cause me some concern because, again, that homeowner's policy does not cover those items.
That's a really good point. Yeah, I think there is probably that baseline assumption. If it's in my house, then why wouldn't it cover it? So there's a question here that the question is the software you used in the example at the beginning available for our use? Unfortunately, no. That is software that we do use for our clients that we subscribe to use. So I wish that was out there mainstream because it really is pretty powerful. There's a lot of information that kind of goes into the back end of that, but yeah, unfortunately, that's not available for general use. And it looks like, Kelly, there's a question for you. Do you suggest that a homeowner purchase a builder's risk policy when doing a major home addition project?
I think what you have to look at there is really what that project is. If you are investing a lot of money in that project, by all means, we're never going to tell you that you have too much insurance. But one of the things you have to keep in mind is the homeowner's policy that you have kind of stipulates sometimes, what they will cover and what won't be covered. So again, this is really something that can be very individualized based on your policy and the carrier. And you would really want to reach out to them to say, hey, this is what I'm doing. Do I need more coverage? A builder's risk is typically, you're not going to get liability coverage there necessarily, and you are not going to get coverage for contents under that type of a policy. So as much as I'd love to give you a definite answer, you really should check with your agent, with your existing policy, what it covers, what it's not going to cover, and make that decision from there. Your builder or your contractor should be able to help a little bit because sometimes they as well will purchase coverage through their commercial on behalf while that's being done.
Okay. Looks as if we have another question that's coming in here in just a minute as well. And just to let everybody know, when we wrap up today, we will be following up this presentation with a quick follow-up, providing all of our contact information. So if you do have other questions that kind of pop into your mind later, or there's something that we can help you with, we would love to hear from you. We'd love to help kind of support your decision-making process for you, because it is a lot to weigh on top of the millions of decisions that you have in the project itself. So please let us be a resource for you. And well, we'll see. It looks, like I said, it looks like there's a question coming in. Is there anything else, Gail or Kelly, that might make sense to mention today that maybe we haven't touched on to a great degree?
Not that I can think of.
Yeah. It looks like there's another question here. Since limits for intricate landscaping are minimal, are you able to purchase more insurance for this? So if you have, expensive trees or shrubs or hardscaping, how do you cover that? I mean, you mentioned the retention wall challenge before. How do you pick that up?
You potentially can't. Unfortunately, there is, again, with the landscaping and the trees and shrub portion of it, there is a specific limit under your homeowner's policy for that. You can sometimes increase that, but it is, with some of the landscaping projects, it's definitely not going to be enough to cover that whole project. So unfortunately, no, there's not a whole lot you can do on the landscaping piece of it. Gail, I'll explain a little. Gail and I work with really two separate. She does handle our high net worth clients. So some of her carriers are definitely a little bit more keen to what can be spent in that area. Therefore, they might provide more coverage than what my standard or general market does. So from my perspective, no, you can typically increase it, maybe by $2,000, $3,000. But if you do a $40,000 project, there's really not a way to insure that on landscaping.
I think some of the high net worth carriers understand the exposures that come with a larger home, and they will include hardscaping under other coverage, other structures coverage, depending on where it is. Again, it depends if it's connected to the home, like you said, Kelly, or if there's a grass patch in between. But there can be some additional coverages with those high net worth carriers.
And some of those decisions just go back to that quality of life too, as far as how much you want to spend in that area, because it's going to create that serene environment that you're seeking. But okay, this has been really great. I really thank Kelly and Gail and all of you for tuning in today. This has been fun to cover, and as I mentioned, I mean, you just have to look around the neighborhood and the neighborhoods around you, and there's a lot of work being done, a lot of activity going on. So if we can, once again, be a resource for you, we're happy to do so. And hopefully everybody was able to pull out some little tidbits of information to help guide the process. So thank you all for joining us, and I hope you have a wonderful day.
Thanks, Katie, for having us again.
Thanks, Katie.
Sure.